Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in Dubai, and these are the stories that set your agenda. Waiting for Powell. Asian stocks and futures pull back ahead of the Fed chair's highly anticipated speech at Jackson Hole tomorrow. Expect more cuts. The ECB's Fabio Panetta says the euro area is heading towards further loosening of monetary policy. We'll look ahead to today's PMI data from that region. And Tim Walz formally accepts the Democratic nomination for Vice President, laying out the policy case for a Kamala Harris presidency. A very good morning. Welcome to the programme. Just crossing the terminal, we have some of the Aegon results. So let's bring you the latest from the Dutch insurance company. It has dividend per share at 16 euro cents, so slightly higher year on year than 14 euro cents. And it says that it is on track to achieve its medium-term targets. They're taking 154 million euros impairment on that NAB banking unit. But of course, the full year guidance very much in focus here. UBS had flagged a possible upgrade to the full-year operating capital generation guidance off the back of the higher equity markets in the US. Our analysts at Bloomberg Intelligence had expected a year-on-year decline in that operating capital generation. And indeed, we are seeing here first-half operating profit coming in at 750 million euros, so weaker 8% year-on-year. A first-half net loss reported of 65 million euros, so down 67% year on year. We will continue to keep across all of that for you. The shares up nearly 11% so far this year in Amsterdam. We're going to be speaking to the CEO of Aegon, Lard, Friese, later this hour. But let's also take a look at these broader markets. Of course, we've got Jackson Hole kicking off in Wyoming today. And as we await Chair Powell's speech tomorrow, we've got a clearer picture, perhaps, of where the Fed is heading on rates. The latest Fed minutes last night all but confirming that a rate cut in September is imminent. Several members already having seen the case to cut in July, but these minutes not giving us real hints that September's going to deliver a half-point move. So as we head towards today's session, you're looking there at futures pointing slightly lower on both sides of the pond. And if we flip the board over to the cross-asset picture, the 10-year US Treasury yield steady as we head towards Powell's speech. Euro-dollar still floating around that year-to-date high, 111. The momentum behind this is strong. Gold still again near a record high as we head towards Powell's speech, but 0.4% weaker currently. And Brent even weaker, $76 a barrel. Not a lot of oxygen in this crude market. Traders really monitoring the weekly stockpile data, but also continuing to watch Washington's push for a Middle East ceasefire. But let's get over to Avril Hong now. She's on standby for us in Singapore with an update on Asian markets. Avril, over to you.
Yeah, Lizzie, we're seeing Asia's stock benchmarks mostly moving sideways despite a positive handover from Wall Street as traders got more confidence they're going to see the Fed rate cuts that they've been betting on thanks to the dovish Fed minutes, but also that downward revision on the jobs based on preliminary data. But despite that positive handover from Wall Street, that's not really moving the needle in this part of the world because investors are keeping an eye out on Powell as well as U.S.A. tomorrow. Ahead of that, we did get a Bank of Korea decision, leaving things unchanged as expected. It highlighted debt risk, but also opened the door for rate cuts to come. And that is why we're seeing the Korean won losing ground. It's pretty flat on the stock benchmark in the country. Let's flip the board because offshore yuan has also been moving sideways pretty much against the greenback. And something else that I wanted to highlight out of China today is, you know how the economic weakness has fueled those bits of policy easing. That's really what's been driving the China bond rally. The authorities there have been trying to cool. And today we're getting these local media reports citing comments from an official from the Chinese regulatory body that it's not so much about how they want to control yields. It's more about financial financial stability. It's more about cracking down on the illegal trade in the bond market. So that's something that's providing further fuel for bond bulls. You see that tick up there. Flip the board again. As we keep an eye out on UEDA, we're not really seeing that much move on dollar yen either, but a measure of expected overnight volatility has jumped to the highest in 2 weeks, which was when we saw all that market chaos. So it just gives you a sense of what investors are bracing for. Lizzie.
All right, Avril Hong in Singapore, we thank you for the update. Now, I want to analyse those minutes from last month's Fed Reserve showing some officials seeing a plausible case to cut rates before the committee voted to keep them steady. We also had the Bureau of Labour Statistics facing questions after yesterday's payroll data release was delayed. Bloomberg MLive strategist Mark Cranfield joins me now for more. Mark, we had at least 3 banks managing to get their hands on these payroll numbers yesterday, and the rest of Wall Street kept waiting for, I think it was half an hour. Was the reaction in markets, it seemed a bit confused, caused by the delay or because traders decided they just weren't that worried about the revision, even if it's the biggest in 15 years?
Well, I suspect that traders, the numbers, when they finally saw them, they probably weren't too shocked. It was some people have been going into it expecting something like 1 million jobs will be reduced in total, and we're expecting something closer to 900,000. So not a huge difference in that respect. On the other point, that some people received the data before the others, the gnashing of teeth will go on for some time. That is always a big discussion point among banks and financial institutions in Wall Street if somebody gets an edge on the data. So you'll be hearing a lot more about that, that's for sure. But in terms of what it tells traders from the data itself, they were pretty confident going into it that the Federal Reserve was going to give them the green light pretty much for a September interest rate cut. That's how the picture looks. If you take in combination those numbers plus the FOMC minutes, it pretty much all together tells you there's nothing really to stop the Fed going ahead in September. We do have some more data to come. It's important. We've got a PCE report next week and we've got a jobs report in the first week of September. But it would need something shocking now to really derail traders from thinking that they've made the right choices. You can see the extent of their bets on the Treasury curve is substantial. We've been reporting on Bloomberg. There is probably the largest ever leverage positions we've seen on the Treasury futures market. And that tells you there is an enormous amount of money concentrated on expectations that interest rates are coming down. It will need something very, very shocking to dissuade anybody they've got it wrong at this stage.
But Mark, you talk about that upcoming jobs report. When you've got these issues from the Bureau of Labour Statistics, when you get revisions like these, does it kind of take the edge off the importance of that report?
Possibly at the margin, but whatever way you cut it, every time the jobs report comes out, it's a very substantial piece of information. It's key to the whole picture, particularly as the Fed watches jobs and inflation more than anything else. And at the most recent one, we had that uptick to 4.3% in the unemployment rate itself. So that was the one that caused a lot of market disruption. And obviously, whatever the number is, people will respond to that. We expect, at the moment, we expect something pretty much unchanged, but there's still a couple of weeks to go. And it is a notoriously volatile number. So whatever prints, even allowing for the fact that maybe the numbers themselves are not perfect by any means, there's room for discrepancies, and yet come that day, everybody will have positions one way or another, and they will certainly respond. And of course, nowadays you have to take into account that you've got things like algo systems as well. They will respond to the headlines regardless of whether it makes sense or not. So you will get big movements on the day. And if we do get an increase from 4.3 to something higher, that will even start people pushing for another chance at the 50 basis points rate cut, which seems to be off the table, but it could easily come back on.
Well, if anyone wants to send me that next jobs data, really, you've got me on IB. Mark Cranfield, our Bloomberg MLive strategist, we thank you as always. And do stick with our Bloomberg coverage for Fed Chair Jerome Powell's speech at the Jackson Hole Economic Symposium. We'll bring it to you tomorrow. We're going to be sitting down with the Atlanta, Philadelphia and Chicago Fed presidents and the former Kansas City Fed president, Esther George. So don't miss any of that. But let's now focus on day 3 of the Democratic National Convention in Chicago. back to the politics. The Democrat vice presidential nominee, Tim Walz, formally accepting his nomination, taking the centre stage. And in an energetic speech, he said that Kamala Harris was the right choice to make middle-class Americans more wealthy.
If you're a middle-class family or a family trying to get into the middle class, Kamala Harris is going to cut your taxes. If you're getting squeezed by prescription drug prices, Kamala Harris is going to take on Big Pharma. If you're hoping to buy a home, Kamala Harris is going to help make it more affordable.
Meanwhile, in North Carolina, Republican running mate J.D. Vance told a large audience the U.S. needed a Donald Trump-led government to get the country back on track.
Now, Donald J. Trump represents something that so many in this country need right now, and I think it's important to recognize that we need hope in the United States of America. Hope that we can reignite this economy and bring back prosperity to American citizens. Hope that we can raise our kids in secure neighborhoods and safe streets. Hope that we can renew the patriotism that binds us as a country together, one nation under God.
So the prospective VPs jostling for the limelight. Let's bring in Bloomberg's Vonnie Quinn for analysis. Vonnie, how did Tim Walz do today? What do you reckon?
Well, it's funny you mention hope, and J.D. Vance's, mentioning of the word hope quite a lot, because you heard that at the DNC as well on day 3. And in fact, Tim Walz's daughter is called Hope, and she had, plenty of presence there. But as for his broader performance, I think it's safe to say that he played it safe, and he also introduced himself to the American public. And in 15 short minutes, he mentioned what Kamala Harris would do for policies. And then the coach in him came out, Coach Walz. This is the personality that he has been introducing to the American public for some time. And he said, it's the fourth quarter, we're down a field goal, but we're on offense and we've got the ball. Our job is to get in the trenches and do the blocking and tackling. It's clear that after a day of celebration and lots of celebrity appearances, Tim Walz knows that this is a job he's going to have to take extraordinarily seriously, the business of actually getting elected. It's one thing to accept the nomination. It's another thing to move swing states like Pennsylvania, Arizona, North Carolina, in fact, where Donald Trump and J.D. Vance were today. A critical state for them to win if they want to get to the White House. And as we've heard through this DNC, it's going to be a very, very close election.
Yeah, as you say, a jam-packed lineup, glitzy vibes. What are the other messages, though, from the key speakers on day 3?
Sure. I mean, you had Oprah Winfrey coming out and mentioning the cat ladies meme. There was definitely some moments of levity, some laughter. Bill Clinton was one of the featured speakers, and he mentioned how, the only thing that he wanted to say for vanity reasons was that he is now 25 years after having been in the White House, still younger than Donald Trump, and that got a big laugh in the crowd. But there were similar messages to previously that there is no reason for complacency. In fact, there's an urgency not to be complacent in this particular cycle. Oprah Winfrey said that, elections had been taken away under the Democrats' noses for some time, and that this was not to be a case of that. She also spoke directly to independent voters, which was fascinating because we haven't had somebody speaking beyond the registered Democrats that are in this arena, right? Oprah said she had been a lifelong registered independent. She had always voted her values, and she urged everybody out there to vote the right way, to vote their values. We also had, of course, a bevy of celebrities, as you say, Lizzie, the likes of Stevie Wonder kicking things off earlier on. You see Amanda Gordon there. And then, of course, people like Keenan from Saturday Night Live, and also John Legend. So it does remain to be seen who the DNC will roll out tomorrow to introduce Kamala Harris, because obviously tomorrow is the highlight of the whole convention when Kamala Harris accepts the nomination formally.
All right, Bloomberg's Vonnie Quinn, we thank you for the update from the DNC. But we've got plenty still ahead on the docket today. At 9 a.m. UK time, we get those Euro area PMIs. We'll bring you a preview shortly. Then at 12:30 p.m. London time, it's the ECB July meeting accounts. Of course, they left the rates unchanged in July. The guidance was as neutral could be. Clearly not trying to rock the boat, but it'll be good to understand how much growth concerns are outweighing the worries about sticky inflation. So we'll dig into those. And then finally, as Vonnie says, we've got Harris's acceptance speech at the DNC. But you can get a roundup of the stories that you need to know to get your day going by going to today's edition of Daybreak. Grab a coffee, tuck into it. Terminal subscribers can find it by going to DAYB Go. But coming up on the programme, the German Chancellor says that aid to Ukraine will continue despite budget constraints. We'll bring you the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. 6:17 a.m. in London, and controversy in Germany this week as the government's financial support for Ukraine was called into question due to budget constraints. Since then, several politicians have tried to reassure that Germany will continue supporting Ukraine, including the Chancellor himself. And we can get more now from Bloomberg's Oliver Crook. He joins us from Berlin. Ollie, how real is the doubt that Germany is going to stand by Ukraine when we've had all of this back and forth?
Yeah, so Lizzie, the reason that this is so important is that Germany has obviously been the biggest supporter financially of Ukraine within Europe, only second in the world to the United States. And when you hear things like the finance ministry saying that basically there will be no additional new funds available to Ukraine going forward, people really have to pay attention to that. Now, as you've mentioned, some of the sort of politicians have come out to sort of try to dial that back, saying that no, they need to, what they're doing is emphasizing basically that the sort of financial commitments that are already there will continue to be honored. That means that there will be 8 billion euros this year. There will be 4 billion euros next year. But back when you go to 2027, that goes down to 500 million euros. So that is materially lower. So when you hear this sort of stuff, none of these politicians, by the way, have said we're going to change our budget and we're going to make room for new money here. They're pointing to what they've already committed, and they're saying we're going to actually be paying all of this money from the Russian assets. That's what this whole sort of G7 agreement has been about, was to get those Russian assets moving. The problem is they haven't really hammered that out yet. And the real problem, Lizzie, is a political one, because when you have Germany, a sort of country of that stature within Europe, so supportive of Ukraine, basically sending those kinds of signals politically to Moscow, to Putin, but also potentially to a Trump presidency, it gives a lot of ammunition for, say, Trump and Vance to say, listen, Germany's not even paying anymore. They're not giving any more money. Why should the United States?
Yeah, but that's the politics. What about the economic reality? You know, you've got Germany's own issues. We've got PMI coming later today. What are we expecting?
Yeah, so listen, the PMI data is really at the fundamental core of the German story right now, and part of the reason that they're not in such a powerful position economically and budgetarily, right? So we have the PMI data coming out across Europe a little bit later. I'll give you a quick preview of that. I mean, broadly speaking, across Europe, we're expecting services to grow a little bit, coming around the sort of 50 mark, just above it. The issue that you've got is around manufacturing, which has been in contraction for most of Europe for most of the year. And in Germany, I mean, manufacturing has been in contraction for 2 years now. More than 2 years. And that is a huge part of the German economy. And it's really substantial because this is the old growth engine of Germany. This is the thing that has generated wealth for Germany for decades and decades. What was also interesting is I saw a survey out overnight about new businesses that was run by the German Chambers of Commerce, where basically Germany is seeing record low interest in founding new businesses. And Lizzie, this is relevant because when the old growth engines are failing, what you need are new growth engines. And when you have huge issues on bureaucracy and labor costs, it makes it tough to start businesses. It's now at an all-time low in terms of people wanting to start businesses in Germany, and rates probably a little bit higher than usual. Doesn't help that.
I mentioned earlier we've got the euro dollar at a year-to-date high, 1.11 where we trade currently. Where does it all leave the ECB? Yeah, well, listen, we've heard from Panetta overnight, who's basically giving us a little bit of breadcrumbs, saying that it's reasonable to think that we're going towards a phase of loosening monetary policy. But remember, Lizzie, and I'm sure you won't forget that what Lagarde said in July, that September is wide open. And, you know, now we're looking at the market pricing. We're looking at a 65% chance of a rate cut come in September. That has gone up a little bit in the recent days and weeks. But, Lizzie, remember, about a month ago, we were talking about a 90% chance of a rate cut, right? So this
data is going to be super crucial when it comes to what the ECB is going to do going forward. We're looking obviously very closely next week at the CPI data. But Lizzie, today what we're going to be looking at, and I think this is really important, is the Eurozone negotiated pay. This is how much pay has been able to go up in the Eurozone in the second quarter. And I should just say that in the first quarter, it went up about 4.7%. That is close to the highest level it had been in 30 years. And this, of course, will determine how much sort of disposable income people have, how much more people are willing to pay, and will bear substantially on inflation. So we're watching that very closely, Lizzie, at 10 a.m. UK time.
Yeah, you're absolutely right, Lolly. I mean, when you've got the likes of Joachim Nagel at the hawkish end of the spectrum saying that the greedy inflation beast is no more, pay and growth really clearly important, more perhaps than inflation for the ECB. But Bloomberg's Oliver Crook, we thank you for the preview. Later today, we're going to be hearing from the Bank of Latvia president at Jackson Hole, getting his thoughts on ECB rate cuts. So don't miss that interview just after 7 p.m. UK time. But I want to stick with German news. Deutsche Bank saying it expects a €430 million boost to its third quarter results. That's after the German lender said it's making, quote, significant progress in talks over the majority of claims in the Postbank case. The suits claim Deutsche Bank underpaid for its acquisition of the German retail banking giant in the late 2000s. Well, lots of Germany news this morning, plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, to one of our top interviews, the Hong Kong exchange operator has reported a 9% jump in profit in its first full quarter under the new CEO, Bonnie Chan. Speaking to us after the results, she told us mainland Chinese investors are turning to Hong Kong to diversify their portfolios.
I think, it's the normal ebb and flow of the market, right? So it's a good thing that we see volume really picking up in the months of April and May. And the recent 2 months, maybe you see a little bit of softness. It's simply a reflection of, I think, a few things, right? The general market environment, macroeconomic conditions.
Chinese economy is not doing well. Let's be honest.
Okay, investors are worried about a lot of things these days, right?
And the flow of information out of China as well.
Election. But I always say we invest in the market for the long term, right? Yeah. So I still sort of pin my statement about being cautiously optimistic on the fact that we're sitting on very strong fundamentals, long-term promise. And we're talking about, and I've mentioned it to you before, the phenomena that the world is so underinvested in mainland China and vice versa. Mainland Chinese investors are looking for opportunities to divest their investments overseas.
That's why southbound was up about 47%, wasn't it, from China into Hong Kong?
Southbound has been very, very strong this year. In fact, it's gone up in the first half compared to last year, second half, over 20%. So we are seeing that kind of interest from investors coming down from the mainland to diversify their investments. And I think we are sitting in a very good position in terms of capturing that as the super connector.
Hong Kong Exchange CEO Bonnie Chan speaking with our Chief North Asia correspondent Stephen Engel there. Now to some of our other top corporate news stories this morning. PricewaterhouseCoopers China unit is reportedly bracing for a 6-month business ban from Beijing. According to the Financial Times, it could start as early as September as part of punishment over its audit of property giant Evergrande. More than 30 publicly listed mainland firms have dropped PwC as their auditor this year after scrutiny of its role in an alleged accounting fraud at Evergrande. Well, coming up on the programme, we're going to look ahead to the latest euro area economy data with today's PMI numbers due this morning. So do stay with us for that. We're looking at futures currently pointing lower. This is Bloomberg. A very good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden with you from Dubai, and these are the stories that set your agenda. Waiting for Powell, Asian stocks and futures pull back ahead of the Fed chair's highly anticipated speech at Jackson Hole tomorrow. Expect more cuts. The ECB's Fabio Panetta says the euro area is heading towards further loosening of monetary policy. We'll look ahead to today's PMI data from that region as well. And Tim Walz formally accepts the Democratic nomination for Vice President, laying out the policy case for a Kamala Harris presidency. A very good morning. Welcome to the day. We are looking towards the cash open being slightly lower this morning for equities. Jackson Hole kicks off. We're awaiting Powell's speech tomorrow. Hopefully a clearer picture of where the Fed's heading on rates. We already got the Fed minutes last night, confirming pretty much that a rate cut's coming in September, but not a lot of clues as to whether it's going to be a half-point move. So as we head towards the session, it looks like it's going to be pretty risk off. But if we flip over to the cross-asset picture, the 10-year US Treasury yield lower a basis point at 3.8%. Euro-dollar still floating around that year-to-date high of 111. We await that data on the PMIs and negotiated wage front that we were discussing with Oliver Crook. You've got gold still floating around a record high ahead of Powell's speech, but Brent even weaker at $76 a barrel as we continue to see traders prioritising the demand story over the geopolitics as Washington continues to push for a ceasefire here in the Middle East. But let's dive deeper into the macro. We've had the minutes from last month's Fed Reserve meeting showing some officials did see a plausible case to cut rates before the committee voted to keep them steady. Bloomberg's Jill Desis has been going through those minutes for us. And Jill, you had Fed officials acknowledging that there was a case to cut rates in July, some of them at least. What does it tell us about September?
Well, Lizzie, I think you hit the nail on the head there when, really what this comes down to is a question of whether we're going to see a cut by 25 basis points or half points. I mean, at this point, what those minutes showed us is that, the Fed is certainly open, or at least, as you said, some of the Fed is open to cutting rates. Futures markets certainly are pricing in a rate cut. But you also have to look at these Fed futures markets also think that there's going to have to be enough cuts by the end of 2024 to imply that at least one of the three meetings left for the year is going to be a half-point cut. So which one is that going to be? Is that actually going to happen in September? Is that going to happen a little bit later? I will say, Lizzie, I don't really know that we even got that much other clarity out of that other jobs data that came out of the U.S. overnight, just showing that downward revision in payroll growth for the year ending in March. That was pretty bang on too with what we were expecting, a pretty sizable downward revision there. So what I think this ultimately tells us is that a lot is going to have to come out of Powell. We'll see what happens, what kind of indication he gives us out of Jackson Hole, because a lot of the data is showing us, yes, it's going to be a cut, but I don't really know that we have enough clarity yet as to tell us by how much yet for September.
I mentioned, Jill, about the reaction function over at the ECB as well, kind of moving from focusing on sticky services inflation to this focus on growth and negotiated wages. We get the PMI data as well out of the euro area today. What do you expect? How likely do you think it will be that the ECB cuts again next month?
Well, Lizzie, I think at this point, what a lot of our surveys are showing us about, that overall PMI gauge, so just the composite figure for the Eurozone, is you're probably going to see that having eked down again in August, so down to, 50.1 or so from July's 50.2. That's the composite gauge. Certainly I think there's some pretty broad expectation for continued weakness in manufacturing out of the Eurozone, particularly Germany probably struggled more than France did in the last month, sort of tracking those numbers that we were seeing in July. I will say, Lizzie, I think, at this point we are starting to hear, as you mentioned, you kind of mentioned it a bit earlier, from some of those ECB members about that likeliness for a cut. We also recently heard from Ollie Ryan recently saying, yes, there should be a cut in September. So the data does seem to be trending in that direction as well. We'll see what these PMIs actually show us, though.
All right, Bloomberg's Jill Desis, we thank you. We're absolutely spoilt for central bank speak this week. Later today, we're going to hear from the president of the Bank of Latvia at Jackson Hole to get his thoughts on the ECB's rate path. Do tune in to Martin Kazak's speaking to us at 7 p.m. London time. Now, I want to get back to the health story. Scientists really trying to stop this MPOX outbreak in Central Africa. But what they're finding is a complex mosaic of infection patterns. It involves different strains and different infection routes. But our Chief Africa correspondent, Jennifer Sabasaja, has been looking into this for us. Jen, what do we know about these various infection patterns?
Right, Lizzie, it seems public health officials are learning new things about the way that this virus is spreading and really finding that there's a lot of different ways that we're seeing transmission happening. Now, if we just talk about what we're seeing maybe more globally first, we are seeing sporadic cases popping up across the world. And experts believe that we may continue to see that happening just given the way this mutated virus is spreading. If we zero in, though, on the DRC, because those are the pictures that we're looking at right now, what we've seen in the past is that there is an older strain that has been spilling from wildlife into humans, but perhaps the good thing is that we're not seeing as much airborne transmission happening. And as well, there was concern about children and the impact on children. And it appears, at least on the ground there in the DRC again, 80% of child cases has been a subvariant called Clade 1A. Now, the concern really is this Clade 1B variant that is expected to be a bit more deadly and a bit more concerning. And really what we're hearing from public health officials is similar to what we have seen in the past with COVID and with Ebola. This virus is mutating and spreading quite aggressively. And so they're trying to do their best to keep up with the transmission and the infections just to understand more about really how it's spreading across the world.
So on the vaccine front, Bavarian Nordic, the maker of one of the only approved vaccines, is reporting earnings. Do we get any guidance from them about how MPOX is going to affect their business?
Right. It is interesting. As you mentioned, it is one of the only improved vaccine makers for smallpox and for MPOX in the U.S. And in Europe. We've already seen Bavarian Nordic shares climbing almost 30% just in August. And we got some guidance from them on Wednesday, just talking about how because of this order that they were able to fulfill to an undisclosed European company, they are going to actually be able to reach their top line target for their half year. But not just that, they made it a point to say that over the past few years since the last MPOX outbreak in 2022 and 2023, they've been focusing on strengthening ties with a number of countries around the world and expect that by the end of 2025, they'll be able to distribute at least 10 million of their doses by the end of 2024. They say potentially at least 2 million. So good news, at least right now for Bavarian Nordic. But we should note that these doses are mainly for adults, and their next point, their next target really is seeing whether or not there is an effectiveness with these doses with adolescents and children. But we will be hearing from the CEO later this morning. So it will be really fascinating to see what else they're looking at and what their expectation is moving forward.
Indeed, we will. Our Chief Africa correspondent, Jennifer Sabasaja, we thank you for the update. And as you say, at 8:45 a.m. London time on the opening trade, we're going to speak to the CEO of Bavarian Nordic on how the MPOX vaccine maker is responding to the outbreak. Paul Chaplin joining next. But now to some of the other stories making news this morning. Italian divers have retrieved 5 bodies from a luxury yacht that sank in a storm off Sicily. British tech entrepreneur Mike Lynch and Morgan Stanley International Chairman Jonathan Bloomer among those feared dead after Monday's tragedy. Italian prosecutors are investigating how the 56-metre yacht, which was built to withstand hurricanes, sank off Sicily within minutes. In other news this morning, Paramount shares rose after the bell, with a source telling Bloomberg that Edgar Bronfman Jr. is raising his takeover bid to $6 billion. Earlier this week, he made a $4.3 billion offer for control of the entertainment conglomerate. Paramount had already accepted an offer from Skydance, but has now extended by 15 days a deadline to consider other offers. And elsewhere, Morgan Stanley's former CEO, James Gorman, will lead a committee searching for a successor to Disney CEO, Bob Iger. Gorman joined the entertainment giant's board this year, and Disney notes that he also oversaw a succession transition at Morgan Stanley. Disney is weighing both internal and external candidates to succeed Iger, whose second term as CEO runs to 2026. And Ford says it's making further cutbacks to its EV strategy, cancelling plans for a fully electric sport utility vehicle, and the shift may cost the car maker nearly $2 billion. Ford's also further delaying a next-generation electric pickup and cutting spending on EVs from 40% to 30% of its annual capex. So those are some of our top stories this morning. Let's take a look now at some of the events we're following for you today. At 10 a.m. London time, we get those euro area negotiated wages from the ECB, as we were discussing with Jill and Ollie. Then before the US Open, we are cycling through earnings season with Peloton coming up next. And that leads us on to the latest US jobless claims data at 1:30 p.m. London time and PMIs at 2:45 p.m. London time, both of which I'm sure will come up in conversation at Jackson Hole. That kicks off today in Wyoming. All the while, the Democratic National Convention continuing in Chicago. We're expecting Kamala Harris's acceptance speech later on today. But first, right here on Bloomberg Daybreak Europe, as Aegon's first half operating profit drops, we're going to speak to the CEO, Lard Friese, next. We'll get his view on the earnings story that we have broken for you on the programme. So that's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:43 a.m. in London. And as we reported earlier in the programme, the Dutch financial services group Aegon has posted its results this morning. First half operating profit falling on last year. But we can speak now to the CEO, Lard Friese. Lard, good to have you with me on the programme, joining us from The Hague. I wonder how the macro environment is impacting your business.
Yes, Lizzie, good morning, and thanks for having me back on the show. We are very pleased to report today a very strong set of half-year results, powered by strong commercial momentum across our U.S. product lines, strong commercial momentum in Brazil and also in the workplace business in the U.K. Weaker spots in China and in Spain, and with the start of the half year, the asset management business reversing their outflows of last year to 8 billion inflows for the first half of the year. The overall economy, Lizzie, that you're pointing to, I would call it's cooling off, but not collapsing. And especially in the US, we're still seeing the economy very strong. And also in Europe, we saw a moderate uptick, of course, in economic growth prospects. Now it's all eyes are on, I think, Jackson Hole, of which is starting coverage today. And we need to see what the Fed is going to do and when they will start the easing cycle, which we expect to start pretty soon. The overall economic prospects are still quite okay. And as a result, we expect our commercial momentum to continue.
Well, what do you expect to be the impact of those looming rate cuts that we expect Powell to talk about tomorrow?
Well, we need to see what they do. I don't have a crystal ball here. We need to see what they do, but the consensus expectation is that we've reached the peak of the hiking cycle, and that now the easing will start as Europe has led the way in this. On the back of data, it will be data-driven. We'll probably see the start of an easing cycle to more neutral policy levels. But what it will mean to our business is that we cater for all interest rate scenarios. Our margins, we are adjusting our products where we need in our hedging programs and our ALM. So we are used to navigating through all kinds of rate environments. And we do not expect these rates to fall very quickly. And as a result, our markets will continue to stay in a good place.
I mean, your results have taken a hit from unfavourable mortality experiences related to US final assets. I'm reading from your results here. Can you just explain to us what actually happened there?
Yes, we have observed over the last number of quarters negative claims experience post-COVID. And we use the second quarter usually to look at our assumptions. And if we have any updates, we usually present them then. So we felt it's only appropriate to, given this negative mortality experience that we've seen over the last quarters, to look at our mortality assumptions and to update them. For that, we took a charge today of 400 million. However, this will imply that the operating result moving forward will increase. The overall capital position of the company is very strong, so we can easily absorb this. And if you look at our capital positions and also in conjunction with the strong operating capital generation that we have demonstrated in the first half of the year, we are well on track to our target of 1.1 billion of operating capital generation this year.
Well, given that, can we expect a higher buyback next year?
We have completed a 1.5 billion buyback pretty recently, and we have just started the buyback program of 200 million that we aim to conclude by the end of this year. But the strong capital position indeed has put us in a position to announce today that we are increasing our dividend per share by 14%.
And what are the latest trends in your asset management business?
Well, we saw inflows of 8 billion this half year, which was in the back of new client onboarding in the Netherlands, in the United Kingdom, and money market inflows in our asset management business in China. We are continuing to push on with our commercial momentum that we're seeing there, with a focus on alternative fixed income, sustainable investing, and those strategies are well recognized by our customers, and which is demonstrated by the good inflow profile that we're seeing today.
And I know you talked about your US business at your Capital Markets Day. What's the latest on the transformation there?
The transformation in the US business is going very well. We are increasing our agency sales force by 13% this half year to 79,000 agents in the US. We are seeing across the product lines strong commercial momentum in the US with 1.2 billion, for instance, of new sales in the mid-market retirement plans. So we are making very good progress in our objective to turn Transamerica, as our company is called in the US, into the middle market leader in life insurance and retirement solutions. At the same time, we have financial assets, which are product lines that we've closed off for new business. We risk manage and wish to shrink those financial assets. And also this half year, we've made good progress there by shrinking the capital of those financial assets by 400 million. So also there, we are well underway of our targets in the US.
Well, are there any areas of your business you might, Lard, consider some inorganic growth? Are there any potential markets you're looking at for potential M&A action?
We are focused on organically improving our businesses in the markets where we operate. We really build our businesses brick by brick, and that is something we do already for quite a number of years, and our strategy is clearly making good progress. Of course, wherever we can find inorganic opportunities, we will assess them very rigorously against very strict financial and non-financial criteria, if it can help to accelerate our strategy in those markets to build leading businesses.
All right, Lard Friese, always good to have you with us on the programme. CEO of Aegon, after those results this morning, we thank you so much for making the time. Now, we were discussing the health situation with Jennifer Zabasajja. She mentioned Bavarian Nordic's involvement on the vaccine front, and we can review those results now for the second quarter. Net income coming in at 261.1 million Danish kroner. Their R&D expenses, 209.6 million Danish kroner. Their EBITDA for the full year estimated to be 1.35 billion kroner, and for the second quarter profit 420 million. So a real beat here on the estimate of 202.7 million Danish kroner. So you can see there the share price year to date up 24.4% over the past 7 days, in fact, and they are expected to benefit even more when it comes to the use of these vaccines. So we keep an eye on Bavarian Nordic at the open after those results. At 8:45 a.m. London time on the opening trade, we'll bring you an interview with the CEO on how the MPOX vaccine maker is responding to the outbreak. That's Paul Chaplin. He'll be speaking to Guy Johnson and Kriti Gupta. But we've got plenty more on Daybreak Europe coming up for you, so do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. In our last few minutes here, I just want to take you through some of that European data that we're getting. It's a big day for it. PMIs and negotiated wages coming out of the ECB later today. The ECB's reaction function, it seems, is already pivoting to focus on this slower wage growth concerns as well, rather than the sticky services inflation. So these numbers really important today. You can see there that actually Eurozone manufacturing PMIs have been soft. And if we flip the board, you can see the story of negotiated wage growth slowing at the far right of that chart. But even before all of that data, if we flip the board again, we've seen the euro rising to a year-to-date high. You can see the momentum behind this is strong. Currently, we are trading at about 111, so weaker a 0.1%, but as I say, a year-to-date high. And of course, we're going to keep an eye on the euro as we head to Jackson Hole. Starting off today, but we're not just going to hear from Jerome Powell. We're also going to hear from the ECB's chief economist, Philip Lane, and Lisa Abramovich is going to be sitting down with the Bank of Finland Governor Olli Rehn. He's already said that the increasing risks to Europe's growth outlook have reinforced the case for a policy adjustment when the ECB meets next month. So we'll learn more about the ECB's thinking at its last meeting, not just at Jackson Hole, but also when the latest minutes are published later today. Plenty for traders to be digesting. We also, of course, had that payrolls revision last night. Just to recap, we had a downward adjustment of 818,000. It really does suggest that the labour market may not have been as strong as initially reported. Bad news for the economy, therefore, even if it was in line with expectations. But this labour market weakness, something that was noted in the Fed minutes for July. Bit of volatility and confusion off the back. Stocks rallying, bond yields ticking higher. So after a moment of uncertainty, investor confidence returning. And now, though, we're looking at futures pointing lower in the US. S&P E-minis lower about 0.1%. Euro Stoxx 50 futures lower 0.1% as well. We've got a lot to bring you on the docket today. On the opening trade, we're going to be hearing from Rafael Mariano Grossi, who is, of course, the Director General at the IAEA, speaking to him about recent nuclear safety concerns in Ukraine. Don't miss that interview at 7:30 a.m. London time. At 8:45 a.m. London time, we'll have the CEO of Bavarian Nordic, and we're also going to be speaking to Martin Kazaks of the ECB. So much to keep in tune for, so do stay with us for the opening trade with Guy Johnson and Kriti Gupta. This is Bloomberg.